Morning, and thanks so much for joining in. When we spoke to you earlier in the morning, you indicated that valuations of specialty chemicals and the stocks have run up because growth prospects have improved considerably. So after the kind of run up, the stocks are already factoring in a good earnings performance. From here on, where do you still have comfort? Where do you see upside? You like Aarti, SRF and Galaxy. Walk us through the reasons there.
Yeah, thanks Rima for having me here, and good morning everyone. Yes, as I also have highlighted in the morning that the fundamentals of across the specialty chemical sector has improved significantly. More so, the reasons are that after the COVID pandemic, the world has turned against the China, and that is further helping India to benefit from this specialty chemical growth scenario. All these companies, if we talk about RTS, RF, PI, Galaxy, Fine Organics, and all these companies have gained significantly in terms of global growth prospects about the specialty chemical. We are expecting a lot of businesses may move going forward from China, and India is the biggest beneficiary of that. No doubt, as Sonal also pointed out very well, that valuations across the sector has gone across the roof, and they are probably, some of the stocks are trading at new time high in terms of multiples as well. But that is not the end of the story. We see that the growth prospects, because they are so solid, that the visibility of these companies doing well, not only just limited for 1 or 2 years. We are expecting that businesses may continue to flow for next 5 to 10 years, and that's why I term all this specialty chemical story a decade story now. Year 2020 to 2030 can be a growth year for all these companies. Globally, we are still very small compared to all these companies when we compare it on a global background. That's why we see that there is a huge growth opportunity for continuous growth opportunity in these companies. And if you see that in last 1.5 years, most of these specialty chemical companies, despite having very solid cash flows, have further raised money, whether it's a PI, SRF or Aarti, because they are continuously investing in the businesses. With this investment going ahead and the very high capex, which we are seeing right now, is going to benefit all these companies over the next 2 to 3 years. And that's where we see the story lies for all the specialty chemical companies. I'll just take you through very quickly. Our top picks in specialty chemicals are Aarti. It's a well-diversified player. They cater to across the industries, whether it's polymers, whether it's textiles, whether it's pharma, across the sector, and have invested significantly in 2020 and 2019 and 2020. The benefit of that, we are expecting that will come over next 4 to 6 quarters. Similarly, Galaxy, a completely business model, and they cater to FMCG. As you know that FMCG has gained significantly in this pandemic. They are catering to surfactants. With the rising focus of people towards hygiene, this company is a very solid beneficiary. We see that Galaxy also is going to compound almost 12 to 15 years in terms 12 to 15% in earnings over next 10 years. SRF, it's a diversified company with having presence in technical textile and packaging film also. But the key business of this company is specialty chemical. They have their capabilities, very solid capabilities in fluorine chemistry, along with getting into many other multiple chemistries. They are winning contracts across the world. They have gained customers across the global agrochemical companies. And that's where we see that SRF also is going to be a very strong beneficiary as far as its chemical and specialty chemical business is concerned over next 5 to 10 years. So all these companies, Rima, if you look at from the valuation for just 1 year, probably these stocks will definitely look expensive. And keeping 1 year or very short time frame, people may not like to invest this company only because of the valuation. But I don't ascribe to that theory, because I think that the earnings growth are here to stay. We are expecting all these companies have a potential to deliver 15 to 20% earnings CAGR over a decade. And that's where the story lies in all these companies.
Fair point, Rohan. Thanks a lot for stopping by and giving us all those details. The argument's well made. It's a decadal story. So valuations, while they're high, notwithstanding from the growth opportunity that persists, and more importantly, the 3 picks that he has, Galaxy, Surfactants, Aarti Industries, as well as SRF, we will keep on our radar, not from a 1 or 2 year perspective, but like Rohan said, maybe a decade where a lot of the meat is still there. Thank you for joining in. With that, we'll step into a short break, come back, get back to discussing market technicals with Mitesh Thakkar. The Nifty is off high, so an interesting conversation that Mitesh would bring about. And then we'll also discuss the business outlook with Abhishek Somani, the MD of Somani Ceramics. The stock has given strong returns in 2020, but will the fundamentals deliver in 2021 or not? Is the big question. We will get chatting with Abhishek Somani.
Arey, you wasted your money on this bag. How? I've heard that at this shop, you get the same bag at half the price. Really? Oh no, my bag!